Institutional order flow entry drill is a entry model where you're expecting a fair value gap to be traded into, but not fully closed in. And because you're expecting low resistance liquidity run conditions today, because of all the things I talked about in the first quarter of or first half of this lecture today, all those things building and coalescing with the idea that it's going to be a large range day, it's going to be explosive at the opening. Any opening range gap should not be expected to be traded to, even though there's a 70% likelihood that half the gap should be repriced to in the first 30 minutes. Throw that to the sidelines and expect them to just really make a mad dash to get to the liquidity that we've outlined. Folks, there's nobody else that's taught that stuff. And that's the stuff that I didn't know that I needed to know. Because when I trade in these environments, it's flawless. That's why when you watch my executions, you're like, what in the hell? And you see my stop losses and they're ultra tight and I'm sitting comfortably and they're getting real close to it. I'm not worried about it. I'll add right there. I just shared it with the other day. I added right into it. When it was getting close to my stop loss, more, because I know your jaws would hit the floor. And then all the comments that came behind that trade. What in the hell? Yeah, because I'm using what I'm showing you right here